Position yourself in the last hour of trade. Mitesh Thakkar of earningswave.com joins us on the show now. Mitesh, at every instance when the markets were bouncing higher, rebounding from lows, you were never convinced that the markets can substantially move higher. You were always cautious over the last couple of days. From here on, do you think the markets are showing a significant pressure that we could breach the budget day lows, the 200-day moving average? That support might be taken out and we could be headed much lower?
Good afternoon. I think the overall structure has been weak, and that is why I think the rallies are getting sold into, and that is what we were expecting and hoping. I have been penciling in targets of the 200 average, which you just rightly mentioned, which is at about 17,365, 368 zones or thereabouts, and the overall structure does suggest that we might actually eventually break below that and head towards 17,100 levels as well. So what happens typically is that when the market kind of starts declining, you will get support levels, you'll get bounce back, and then most possibly the market will make a lower high. So I think that sequence of lower highs, lower lows is likely to continue, and therefore in that sense I'm very clearly bearish. But from a trading point of view, you have to tactically adjust. Every time you're near support levels, you want to cover some shorts, trail your stop losses tighter, wait for a bounce back again, then sell into it. So I think that's the way we are approaching it. It's not a market which is falling one way or directionally, because we did spend a good time between 17,500, which was the last time when we tested. This was around 30th of January. And then a good part of February was spent between 17,500 and 18,100, and then we are back to the same level. So I think good chance that we'll eventually break below that this time, or if not today, I think maybe we'll get a 1-2 day kind of a bounce back and then eventually continue the downward journey, because the setup still is on the negative side. So maintaining a bearish view on in that sense. In fact, on the stock side as well, I have one buy and one sell. Whirlpool is something which has come on the buy side, and very surprising actually, because that stock is doing very well in a market which is very weak. So I have a buy here with the stop below 1,300, maybe 1,295, and a target of roughly around 1,400, 1,395 to about 1,400 is what traders can possibly look at. And one sell call, that's on Punjab National Bank. In fact, we've been slightly bearish on the PSU Banks for the last few days. So we've had sell calls in Canara Bank and Bank of Baroda. PNB now can be sold with a stop at 49.5 for a target of around 45, maybe 44.5 on the downside.
Thanks, Mitesh. I think you've read my mind. I was just looking at some of these PSU Bank charts just a while back. Take your calls on board. We'll come back to you in about half an hour to see how things shape up. Thank you for the calls. Let's welcome in Prakash Diwan and take that point on PSU Banks forward with him. Prakash, good afternoon. Thank you for joining in. I hope you have some Friday feeling, some Friday, cheers. We don't seem to be feeling any of it on the street today, right? Just the way the market is, what can we do? But I was looking at the Nifty, guess which is the second worst performing stock on the Nifty this year, this calendar year? It's actually State Bank of India. So question really is it just correcting a lot of the great performance of 2022, or, should one be rethinking their positioning on a couple of these names? What's your sense?
Good afternoon, Surbhi. So I do understand the market has not only been so range bound, it's getting a bit frustrating because the dips which people thought they could buy into has completely turned 180 degrees, and you're selling on any rally that seemingly is crystallizing. I mean, the rallies evaporate within the first hour of trade, and that's typically when there's not much of a trigger or impulse to buy. There's not much of news flow which is seeming very outrightly positive. As I said earlier, you've got all the events exhausted, and it's now the market's waiting for some flow-driven news flow. FI flows could probably come back and things, and that's one of the reasons why it correlates with why PSU banks are suffering particularly. Last quarter, which is the December quarter of 22, we saw this overbought position, consensus build up that banks were the place to go. Everybody wanted to be there. Fund managers came and talked ad nauseum about how BFSI was so promising. But remember, banking is a very long cycle. I mean, once it turns around, it gives you opportunity to get in. It also it takes time to deliver. And from that growth phase where we started seeing NIM expand, we've certainly catapulted ourselves into a scenario where the cost of funds has gone up. So interestingly, what's happening is that while you are expanding the books, the NIM probably is not going to keep pace with it, right? So there's going to be some sort of a reset. But you know what, SBI, the likes of SBI is down about 15-16% from the start of this year. But then, it has so much of it going, so much of positive going for itself in terms of digitization, in terms of, the book that it's kind of expanding so rapidly. Home loans is contributing such a big thing. I mean, everywhere it kind of scores so well. So I think it's a great opportunity for people who have missed out on buying adequately into their portfolio for some of these banks. But stick to the quality banks. Don't go to the end of the tail where, you start buying a Punjab and Sindh or a Bank of Maharashtra or a central bank just because it's kind of, it's kind of come off from its highs. Stick to quality in the PSU, which means essentially just three banks, which is SBI, BOB, Can Bank. Or if you like the private sector banks, I'm sure there is enough revival that's in the offing. HDFC, for me, HDFC Bank seems to be so ripe for a re-rating. I don't know when it starts, but it could happen very soon and it could last for at least 3-4 months. And then that's catch-up trade that HDFC Bank is likely to play. So good stuff. Not to fret too much about where things are. In fact, you're getting a chance to enter if you missed out on that. It's just an overbought to an oversold kind of a territory that we are seeing on the banks.
All right. Hi, Prakash. Good afternoon. Friday or not, but let's talk about a couple of stocks then, and I wonder your view on GNFC. The stock is up close to around 4% in an otherwise weak market. The news that we're getting is that, in fact, some of those larger plants in Europe, maybe their TDI facilities are getting shut down. So the hope is maybe we'll see a bit of a shortage out there. And we had the management of Sheela Foams. They said that prices are up by close to around 30 rupees. Any view on the stock at around 540 rupees odd?
Good afternoon, Nigel. So you've got a very good trigger. We just saw this news come through around noonish today, about BASF closing down one of the biggest plants in Ludwigshafen, and that's a permanent closure. There was an anticipation that they would probably curtail production for some time, given gas shortages, power shortages. But now they're talking about actual shutdown, permanent closure, which means there's going to be a significant gap in the market. It contributes, if reports are right, about close to 10% of the global supply. And if GNFC were to kind of step in some of the markets which BASF was strong at, you definitely have a very great visibility. So all that expansion that they have carried out in the last couple of years on the capacities will start kind of paying off. And that was a big worry that the market had, saying when do they start getting the return ratios back in place, given the incremental capacities they have been setting up. But, at 540, it probably is pricing to some extent because the benefits are long-term. The reaction has been short-term. But look at the same thing could happen to a GSFC as well. I keep on bringing this out that while GNFC is a great play on TDI, GSFC also owns part of GNFC and has its own, optionality within caprolactam. So there's so much going for itself, and there could be a closure on caprolactam producers as well sometime very soon in Europe. So when that happens, you'll again see an impulse of a re-rating for GSFC as well. So, I think it's a stronger balance sheet as well, much more stable. But yeah, it's not very, it doesn't give you that high, which GNFC does with this move. So this is a slightly boring stock, but a great business.
Numbers coming in from SpiceJet Q3. While the top line growth is only up 2.3% on a year-on-year basis, at the bottom line, there is a big jump in profitability. So profits have soared from 42 crores in the December quarter of last year to now nearly 110 crores. So that's a big 2.5% increase, 2.5 times increase in the company's profitability. The stock has spiked close to about 7.5%. We know air travel has been very strong in the last couple of months, and Q3 is seasonally a strong quarter. We're also awaiting more details on their fundraise. Remember, there was a board meeting scheduled today where the company had spoken that they will contemplate a capital raise, perhaps even a QIP. So details on that are